This is Eric Mwatha with Mwatha.com. After the close of September the 30th, 2011, which turned out to be a significantly down month, even though the Nasdaq records now that it had a drop of about 6.36% for the month of September 2011. Some of us at the beginning of the month were calling for a crash in the market. We didn't get that, but at least we got decent downdraft. If you are buying stocks this month of September, you pretty much were ignoring some of the technical pictures, even though we have to all admit, with the VIX being very high, the volatility is crazy and confusing. But at the end of the day, the trend is what you see, which is now the market down 6% on the Nasdaq. Some markets were down much more than that, especially on the commodity front. Now, for next month, we're going to have to do some work, and see what the charts do, and how they behave and how they look like. And sometimes we might need a couple of days of trading in October before we determine what the market wants to do for the month. So right now, going into the month of October, we just have to wait and see how things shape out. But and I'll show you what charts you need to look at to determine whether you need to stay net long, net short, or you need to avoid the market altogether, which is also a strategy. You don't have to be invested if the market is as scary as it has been over the last couple of months, especially ever since the highs of about May 2011. Now, here's a Nasdaq 1-year daily, and what we see on the Nasdaq 1-year daily is, we've talked about this in my last couple weekend videos. There was resistance in this area, also here, which also happens to be where you have a declining 50-day moving average, and once we hit those levels and started moving lower, that is confirmation of resistance. It is also confirmation of resistance of this yellow shaded area, which we've been talking about pretty much over the last couple of weeks on my weekend video. So this market, I've talked about this to no end, almost getting tired of talking about it. I was, even when the market was trading in this area here, kept saying that I thought the market would eventually test these lows of August 2011. In fact, in some markets, we've even broken below those August 2011 lows. So still, that remains my thinking that we are going to test or break the lows of August 2011, especially since already some markets are already doing that. Here's a Dow Jones weekly chart, and what you see here is pretty much what you see in most charts. Is we tried to rally here over the last couple of weeks, but we seem to be stalling exactly at the 10-week moving average. And that seems to be a resistance that this market can seem to move above. Now, we need to watch this level here on the Dow, which is 10,817. If we can't hold that level, then we should not be surprised to see this market keep moving lower. So watch this level on the Dow, 10,817. It needs to hold that if the bulls are going to have a rally. Otherwise, anything below that is going to be scary. Here's the XLF. As of last weekend video, I talked about this level here. And this is one you can watch again. As long as it's below this 12.13 level, 12.13 level, then this market is going to be in trouble. So watch that. If you're a bull and you want this market to go higher, the only way this market goes higher is, first and foremost, it needs to recapture this level here, which was the lowest closing low in August. Like I said, this has been taken out as far as the financial market is concerned. August lows have been busted, and we see ourselves closing here slightly positive for the week, okay, but still below the critical level of $12.13. As long as we remain below that, expect this market to go lower. Now, for the week and for the month of October, watch this VIX, because should the VIX move above this level here, which is 43.05, you're going to see a market drop significantly. So watch 43.05 on the VIX for your key on whether you should stay long or short. As long as the market cannot As long as volatility does not move above this level here, then the market might have a chance to rally. But this is a critical level as far as I am concerned. On the S&P 500, watch 1223.53, which is the lowest weekly closing low of August 2011. If the market holds above that, that's good for the bullish scenario. If the market makes a mistake and finds itself trading below this level, you're going to see another chunk of downdraft in the market. Beginning of the month of September, so I used, when I was looking at this chart here, this is the reason why I thought personally the market would even crash. There was a chance, but 11% is significant drop. We don't see those all the time. So even though it didn't crash, it gave us exactly what we were expecting, which is a huge down month. And it's just based on where the RSI closed at for the month of August. So right now, we'll see where it settles at, but not surprised to see this 11% drop on the Russell 2000. Now, as far as the NASDAQ, the QQQ is concerned, we've talked about this resistance here on the 200-day moving average. All right, this resistance has been holding over the last week, week and a half. Market can't move above the 200-day moving average, which is flat, and we also have a declining 50-day moving average. So given the 200-day moving average, which was going higher over many months, is now going flat, we can't move the price above this level. Then with a declining 50-day moving average, what that tells you is that you are looking at a market that wants to go down. And my thinking right now is more than likely we also want to take out this August 2011 lows. Now this is the QQQ from a weekly perspective, and you will notice that ever since we had this market making new highs, going, the highs of February, highs of April, and then highs of about beginning of June, these highs were coming with declining technical picture. The technical picture kept getting worse and worse. Lower and lower RSI levels meant that those highs, as far as the QQQ was concerned, was very suspect. And also notice that over the last couple of weeks, after we broke this low here corresponds to lows of 2009, lows of last summer. Draw a straight line. We broke below that, and during the rallies of the last 3 weeks, we've been bumping heads on the underside of that. Since we can't recapture that level, we had textbook moving lower. So it's not a surprise at this moment.